Good afternoon, folks. Welcome to our strategy session for December 1st, 2022. In this video, we're going to go over the bullish reaction we saw in yesterday's market action after Powell's speech. We'll break that down a little bit, and then we're also going to go over some sectors and stocks that we're currently watching in the market. So stick around for that after the intro. All right, well, let's start off by looking at some of the indexes. So I'd like to start off with the SPY first and just break this down a little bit for you on what we're looking at in this chart. So obviously we've been in this bear market downward trend for quite some time, basically since the beginning of this year. Now, one thing to note is the way this pattern was developing, you can see how these trend lines, the bottom trend line and the top trend line, how they're getting farther and farther apart. So I'll zoom in just a little bit here. So obviously a pattern like this is not sustainable indefinitely. At some point, this pattern has to break. And basically the reason for that is as these trend lines are getting farther and farther apart, it means that each rally and each pullback becomes more and more extreme, which, doesn't really make sense over time. So in a bear market, eventually at some point, you'll have to start to see more shallow pullbacks and at least like a sideways consolidation type movement or some stronger rallies that will eventually get us out of this bear market and into the next bull market. So a couple things to note on this chart that I just wanted to go over here real quick, just to point out. So one thing that was really notable was this last low over here. Even though the SPY did make a lower low compared to this June low, it didn't come anywhere near this bottom trend line. I'd say this came, what is that, maybe a little lower than halfway between these two lines, or a little more than halfway down in this channel. And from there, it had a really nice rally and basically brought us right back to this top channel again. So that's definitely notable that we haven't touched this bottom channel during the last pullback. That could indicate that we're starting to form a bottoming pattern. Now, the other thing I wanted to go over is after yesterday's Fed speech, so after Powell gave his speech yesterday, not a whole lot of details in there, not a lot really to go over as far as his speech in particular, other than that, he definitely was, I'd say a little less hawkish than what he has been in the past. If you remember previous speeches that he's given usually have caused, really big market sell-offs, and that didn't happen this time. In fact, what we ended up getting was a really, really nice bullish engulfing candle that took out the highs for the last, 3-4 days. And not only that, but it did it on really nice volume. So if you look at that volume from yesterday, we got a really nice volume spike and this huge bullish engulfing candle. And actually, if we look at say a 30-minute chart, you can see that, the high volume really came in after his speech. So the volume definitely was buying volume that happened, towards the end of the day. So going back to the daily chart, really nice candle yesterday, and not much of a move today, other than, again, you can see that we're right underneath or right at this this downward sloping trend line. And that's kind of expected after a big move like yesterday. I wouldn't have expected another big move up today. It's nice to see that we didn't get a pullback. We didn't really erase the gains from yesterday. Probably the most constructive pattern from this point would be if we can get some sideways action, get the prices to consolidate a little bit, get the Bollinger Bands to tighten up a little bit, and then hopefully from there break out above this trend line. That would probably be the most constructive. So that's what we're watching for now, to see what price is going to do, from this point. Now that we're at this resistance level. So it's also important to note, this is really the first time we've been above the 200-day moving average since back here in March. On this last rally, we couldn't make it. So definitely some things to note on this chart. Now, am I saying that, the bottom's in and, pile in and go long? Not necessarily. We could still get a pullback. It wouldn't be out of the question to get a pullback, say even down to the 50-day moving average. That would be all the way down at 380. So I would just watch this for a while now and see how price reacts to this trend line. See if we get a pullback, maybe just to the 21 as the 21 starts to, move up a little higher. Maybe we get a pullback only to the 8-day and then break through this trend line. So I would just watch it for now and see what kind of reaction we get, at this level that we're at. All right, so if we look at the Dow, this chart actually looks even better than the SPY. So we can definitely see that there is some relative strength in the large cap, in the Dow stocks. They've been above the 200-day moving average for some time now. We're actually getting some better action with the moving averages. They're almost all in the correct order. We have the 8, the 21. Really, it's just the 50 and the 200 that are still in the wrong order. And the 50 is actually pointing up already. The 200-day is starting to flatten out. So you can definitely see that the relative strength so far has been in the Dow stocks. If we look at the small caps, the IWM, again, we'll notice, very similar to the SPY. We're just barely breaking over that 200-day moving average. Zooming in here a little bit. It does actually look pretty constructive, the way it's forming this pattern. You can see the Bollinger Bands are getting really tight. After we made this double bottom, actually, I guess triple bottom, back in October 13th, since then, the price has rallied a little, but for the most part, it's been going sideways now since around the beginning of November. So I really like this price movement. If we can build a base from here and then break out above this 189.80 level, so say above 190, that could potentially give us a nice move upward. So I would definitely keep an eye on the small caps also. Now, what's interesting to note is even if we look at some of the stocks that have really been beaten up, like the semiconductors, so this is the SMH semiconductor ETF. So even this one's rallied pretty nicely over the last several weeks. Looks very similar to the SPY chart. Again, if we zoom in here a little, we can see that we are just barely above that 200-day moving average. And again, it's the first time that we've done that since March. So it's really constructive to see that, not only are the stocks that we've talked about lately, like the oils, the materials, those types of stocks, not only are those continuing to rally, but we are finally starting to see rallies in some of the really beaten up stocks. So if that can continue, that should hopefully push the entire market higher. Now, I wouldn't necessarily be looking at the semiconductors or some of these beaten down techs for entry points just quite yet. Actually, later in this video, we'll go over some of the industries that we're still looking at that have probably better entries than these. But I just wanted to point this out. It is notable that we are starting to see some nice recoveries even in this sector. So now, real quick, before we look at some stocks or the sectors that we're currently looking at, I just wanted to bring up the VIX just to show you what we're looking at here. So again, I think in the last video I mentioned, this breakdown here back in August, where we broke down below this trend line, that was kind of the first shot across the bow, the first warning sign that the VIX might be starting to break down. We did get another big rally in the VIX all the way back up to this trend line, but now as you can see, we've decisively broken through the trend line and are currently headed lower. So the question now is, where's the VIX going to end up? Where's it going to find support? This low right here was around 1945, so we are getting really close to that low. It'll be interesting to see if we can get there and if that's going to hold as support or if it'll break through that level. It wouldn't surprise me, I guess, if we got a little bounce from here. One thing I'm noticing is that, if you look at the RSI, we have been oversold for quite a while. And if you look at today, we're actually making a higher low on the RSI compared to these previous few lows. So that could be indicating we're getting a little bit of a bullish divergence in the RSI. Could get a little bit of a bounce. Now, I wouldn't expect anything too crazy, but realistically, even if we got a bounce back to this trend line to test this trend line from the bottom, but that would mean a bounce all the way back up to 26, which hopefully we don't see it go up that high, but it's not completely out of the question yet. Probably more realistically, what I'd be looking for is if we do start seeing some green days, maybe a bounce back up to this 21, so that will be around $23, and then hopefully a breakdown from there. So as long as the VIX keeps breaking down, obviously that's good for equities, good for stocks, actually good for the bond market also. So we continue to watch this to see how the VIX reacts. And the last one here we want to look at just real quick is the US dollar. So I'll bring that chart up. This is actually looking really good. Today we actually broke below the 200-day moving average. And again, that's probably the first time we've been below, first time we've been below the 200-day since June of 2021. So definitely a good sign again for stocks to see the dollar start to break down. We did have this big pullback, so kind of a flag pattern here where that's the flag pull, bit of a flag, and now we've broken below that flag level. Be interesting to see if we get a close below the 200 day, or how this reacts by the end of the trading day. But for now, we're below the 200, and we'd like to see obviously this continue lower, but it wouldn't be completely out of the question again to get a bounce, maybe just to test the bottom of this trend line, or even a bounce to the 21-day moving average, and then hopefully a break lower from there. Taking a look at the RSI on this one actually looks probably better than on the VIX. I guess you could say that is a higher low right now at the moment, but we'll see where this thing closes by the end of the day. But for the most part, it looks like we are starting to make a downward trend. It's just a matter of, are we going to get one more bounce before it continues lower, or is it just going to continue lower from this level? So that's obviously something important to watch, see how that's going to affect stocks. All right, so now moving to a few sectors that we're looking to. Again, we covered this one in the last few videos, but really still think that oil stocks, oil and gas, or the energy sector is where you want to be watching. So if you look at the XLE, again, it's right at resistance level now. So, we made this top back in June, had this pullback, and basically got right back to those levels here. I think, on this day here, we did break it just slightly, but just trading sideways now. So ideally what you'd want to watch here is for some more sideways consolidation. If we can get this to trade sideways for another, couple weeks, several weeks, and then break above this 94.71 level. So I'd put an alert right here. You can create an alert right around 94.83. And the longer we can create this base, the better, the higher likelihood that we'll get a nicer move up. The 50-day moving average is getting really close now. So if we got some sideways movement until the 50-day catches up, either catches up to price, or at least maybe catches up to the bottom Bollinger Band, and then get a breakout from there, that could be a really productive entry. So I'd keep an eye on energy stocks. I'm not going to go through all the individual names again this time, but you can look through all the oil companies that are in this ETF, or just trade the ETF on its own. But if you look at most of these charts, like Apache, they'd be very similar to this pattern. The other sector that I'm really looking at is the material and mining. So this sector isn't quite at its highs like the oil sector is. So, we're not back up to here to 66 yet, but still very productive. I mean, if we zoom out here, so if we zoom out, obviously, we're nowhere near 52-week lows like the tech stocks are. So even during this bear market, materials have held up really well. So what we want to see now is we're pretty much right at this resistance level. Expand this here a little bit. So we're right at this resistance level here. Tried breaking out today, but came back down a little bit. So again, just like the oils, what we'd like to see now is some more sideways consolidation, maybe another pullback to the 21. Basically just trade sideways, let this 50-day moving average catch up a little bit, and then ideally get a breakout above this 53.90 level. So you can set an alert. Actually, you could probably set an alert at today's high, so around 54.36, 54.37, 36. I'd set an alert right there and watch for a break above that level. Or you could watch for a pullback to the 21-day moving average, which actually is at the same level as the 200-day moving average, and look for a bounce off that support, and then get your entry there. So those are two sectors that we're really watching right now for possible moves up. All right, and the final sector that we're looking at is the solar stock. So for that, let's bring up Enphase. This is probably one of my favorites in this sector, and as you can see again, right near its all-time highs. After this breakout, the breakout from 270, which is acting as current support right now, it's basically just trading in this sideways range. So we can zoom in here a little more. Basically just trading within this range. We're right up against the current resistance level. I'd watch this for a breakout above 325. So that's where I have my alert set. It wouldn't be completely out of the question to get a little bit of a pullback first, maybe test this 21 one more time, or the 21 has held up the last little while, so ideally we'd like to see it continue holding, but even if it tested the 50 one more time before breaking out, that still would be within the range, really not doing anything wrong. So I would just keep an eye on this one and watch for a potential breakout. And the final stock I want to show you is General Motors. So this one's actually different than the previous sectors we just looked at. And the reason I say that is because this one is, closer to its 52-week lows. It came down from its highs around 67 back in January, went all the way down to 30, and since then has rebounded a bit. But what I like about this pattern is, so it does seem to be making a W pattern or a double bottom pattern, and we're right at resistance right now. So we're right at the top of this W. So what I'd be looking for here is, ideally we'd see some consolidation. So see some sideways movement like we've been seeing here so far. If we can have that continue over the next, say couple weeks, and then I would set an alert right around here. So right around the $42, right around the $42 range. That's where I set an alert for a breakout above this top part of the W. The other way you could try trading this one, if you wanted to get a small position now, I wouldn't get your full position in yet, but if you wanted to do what they call a cheat entry, you could take a small position in this one and sell covered calls against it. So basically what you'd be doing is you'd buy the stock and then you would sell the weekly calls, the weekly $42 calls against the stock, basically bringing down your cost basis. And that way, if the stock continues to consolidate here over the next few weeks, each week you can sell the $42 call and collect some premium while you're waiting. And then once you get a breakout, then you could add to your position. So that would be one other way to look at trading this one. So that's all we got for this video. Hopefully that was helpful. If you have any other industries or stocks that you would like us to take a look at in future videos, you can post that in the comment section. And if you're enjoying these videos, please hit the like and subscribe buttons, and we'll see you next time.